you posit the expression, if Goldilocks is dying, blah, 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 blah. Is Goldilocks dying?
Well, this is the big fear, I think, isn't it? We've talked before about inflation is the bogeyman, right? And last year, it was all about this Goldilocks environment, not too hot, not too cold. That's the kind of meaning there. The idea being that inflation is contained and growth can carry on going, and central banks don't have to put the brakes on too quickly or anything like that. Problem is, this year, there's just a few more signs that inflation is on its way back. You know, we had the jobs growth and then the growth in hourly wages in the US that came out on Friday. Just before that, we had the ECB. Not too worried about where markets are because they see signs that inflation is coming through in the economy as well. You know, have other signs of central banks around the world, the Bank of England, for example, looking at the possibility of raising rates more times this year. So that's those hints there, and that's enough for markets to feel a little bit more worried, a little bit anxious that the situation we had in 2017 may be coming to a bit of an end.
Paul, is there a lot more pain to come in the very near term then? If you and a lot of people are talking about a correction, whether it's healthy or not, I mean, that's more than a couple of percentage points, and really all we're down, at least in the US, is just 2 or 3 percentage points in the last few sessions.
Yeah, exactly. Well, I mean, a textbook definition of a correction, clearly a 10% drop. But maybe people are using the word a little bit more lightly, kind of thinking about the idea that it's just a setback or whatever. Obviously, we're little changed again today in US markets, not really deciding which way we're going to go. It seems a little bit non-committal, people catching their breath, that kind of thing. I mean, you know, markets have an annoying habit, don't they, Vonnie, of going up, and nobody wants to believe that they're going to carry on going. They're waiting for that moment to buy. Eventually, it comes to the point where you think, I'm just going to have to join in. And then just as the last person joins the rally, that's the moment when it takes a step back and catches some of those people out. That's the annoying nature of markets. And so that's why people think that it could be just a healthy correction. Those people that have joined the party too late are the ones that may be ruining their Johnny-come-lately approach.